Okay, excellent. So we are going to talk here about Autodesk. This is a large cap US software company, as symbol as ADSK on the NASDAQ. It trades at $209. It's a $45 billion market cap company, no yield. So what they're a global software company that provides 3D design engineering and entertainment technology solutions. So their flagship software is AutoCAD, which is widely used in the architecture, engineering, construction, and manufacturing industries. Now, when I got out of high school, the first thing that I did in college was went into mechanical engineering. AutoCAD was the software program of choice across the industry back then. And I believe that nothing has changed since then. So, very strong competitive market leadership position in the 3D design space. They also have other technologies as well, including Fusion 360, Autodesk, Construction Cloud, Maya, and 3ds Max. So the company has taken a big hit to its share price just over the last couple of months here. It was in early April. The company had hit a peak of about $264, and since then we've seen the share price collapse down to about 209. A little bit lower. It had hit 200 until just recently. So we're going to get into the reasons for that, but the company did just release their preliminary Q1 financial results for fiscal 2025. These are approximations, but they're expecting that the quarter is going to report 1.42 billion in revenue, which would be year-over-year growth of 12% compared to the first quarter of last year. A GAAP diluted EPS of $1.16 compared to 75 cents last year, or an increase of 55%. And then non-GAAP EPS of 187 for an increase year over year of 20.7%. So I provided the GAAP and the non-GAAP figures here. So nearly every software company is going to report their earnings in non-GAAP. So these are adjusted earnings. The company will use its discretion to make certain adjustments to its net income figure in a way that they believe better represents the performance in that respective quarter. Now, making adjustments isn't necessarily a bad thing. Sometimes adjustments have to be made to provide a more accurate representation of earnings, but it is important to understand what those adjustments are, especially if there's a big difference between the reported GAAP and the adjusted non-GAAP figures. So in this case, being a software company, we've seen that by far the largest line item that affects the difference between GAAP earnings and non-GAAP earnings is share-based compensation. So this is a way of software companies essentially paying their employees with options to buy shares in the future, and it's widely used in the software industry, particularly in some cases it can be up to 20 to 40% of revenue. So it's very important to keep an eye on this figure. But going further here into the preliminary results, the company also reiterated its full year fiscal 2025 financial guidance. So for the full year, they're expecting revenue in the range of 5.99 to 6.09 billion, which would be growth of 9 to 11% compared to fiscal 2024, and non-GAAP adjusted EPS between 7.99 and 8.21, which would be growth of 5 to 8%. Now, if we look at this on a valuation basis, that would put us at a valuation of about 26 times earnings based on the midpoint of their full year financial guidance. If I look at 26 times earnings relative to software companies in general, that looks like a fairly reasonable valuation. However, we do have to note that Autodesk is a company that's had a pretty impressive track record of double-digit earnings growth, and now we're seeing that growth rate drop. So 5 to 8% earnings per share growth for the year, 9 to 11% revenue growth. So when we compare the valuation relative to the growth rate, it's I would say probably fair value to even possibly a little bit overvalued in the near term. What we would want to see to justify, a 25 to 35 times multiple is for that company to get back up to a growth rate in the range of, say, 12 to 20% in earnings per share annually. Now, we had highlighted the fact that the share price has taken a significant hit since early April. So why don't we talk a little bit about that? This was essentially due to an announcement on April 2nd that the company was commencing with an internal investigation regarding its accounting practices, specifically related to how it calculates its free cash flow and its non-GAAP operating margins. And this delayed the release of its annual report for fiscal 2024. Now they just put out another release with their preliminary results on May 31st. The company announced that the internal investigation had concluded and that there would be no restatement of the financials. So essentially, what they're saying here, or implying, is that all of the accounting practices were reasonable and there's no reason to make any changes. However, there were a few shuffles amongst the top management. So Deborah Clifford was removed from the position of Chief Financial Officer and reassigned to a new role of Chief Strategy Officer, while one of the board members, Elizabeth Raphael, was appointed as the interim CFO and will continue to remain on the board. So although the company is implying, I believe, with its release that there was nothing unusual found in the investigation, it seems strange to me that if the company is not making any restatements or changing their accounting property or practices, why they would make this management shuffle. I mean, why move your CFO into another position? Now, there could be some very logical explanations for this. The fact of the matter is we just don't know. But I will say that, there are certain top level management titles that are very specific to the roles, like obviously CEO, Chief Executive Officer, CFO, Chief Financial Officer, and COO, Chief Operating Officer. Those are very specific titles. We know what they mean. We know that they're top management, and we know exactly what those roles are supposed to do. Whereas Chief Strategy Officer, that's just kind of something that seems like it's I wouldn't want to say made up, but we don't really know what a chief strategy officer does. We know what the title implies, but going from CFO to CSO doesn't really. It indicates to me that something was unusual there. In any event, what is our take on Autodesk? We do believe it's a fantastic company in terms of the software. As I said, I used AutoCAD way back when I was in college in an engineering program. It was the leading software back then. And, many years later, I'm not going to age myself here, but a couple decades later, it is still the leading software. It's recurring revenue, subscription model business, very strong competitive advantages. The current valuation, I think, is reasonably attractive, certainly compared to software peers. But as I said, fair value to even slightly overvalued, just relative to the short-term growth rate. So we would want to see that earnings per share growth rate accelerate. And then there's the accounting policies and investigation. This may continue to be an overhang for the stock. I don't really feel, given the share price decline, that there's been an adequate response or communication from the company. But we'll essentially see how investors take this, or if there's more questions or more information that comes out on the conference call. But what I would say, just in conclusion on Autodesk, we think that it is a solid company. It continues to have strong long-term potential. We just think that it's fairly valued at the current price and has some near-term uncertainty.
Yeah, I mean, I'd agree. Autodesk is a company we continually and constantly monitor. I think it has been a great business over the long term, and their transition to a SaaS-based business really, gave this company a great steady cash flow business, but it also ratcheted up growth for the business. Like Aaron said, it slowed. And when you're paying the multiple you're paying now, it's not exorbitant, but it's certainly not cheap. And it is maybe a company that if there is an overall, it's one of those companies we'd watch if there's an overall market decline at some point, probably next 2, 3, 5 years, there's going to be a market correction, a significant one. If Autodesk continues to grow at their rates and even increases growth rate, it may be a company we'd add at some point at an opportune basis. It's never probably going to be extremely cheap, but it might be more effectively priced at some point, and then we might add it.
Yeah, I wouldn't be surprised if some of because we've seen over the last few, probably 3 to 7-ish years, much more like free and introductory software, as well as some free professional software, lower cost professional software in the CAD industry. So since the couple months since Aaron graduated, there's been a bit more competition. So I wouldn't be surprised if
Couple months. Yeah.
that is weighing on a bit. It's still the market leader without a doubt. But there is obviously, if someone's just thinking about going into it, they might not jump into Autodesk. I know they offer discounts or even free to university students and that sort of stuff. But when you start to get more free, more so on, more low cost alternatives, can it remain that market leader that it has for the past 20, 30 years? That's really the question which I would have right now. They do offer other products outside of their just core CAD product. They have Fusion, which I know is still to do with design and so on. And there are some other ones to do with other related softwares, but not exactly in the same area. So they have branched out, and it's not just that core CAD product, but it'll be interesting to see if they are able to keep that market position, I would say.
Yeah, I mean, I think that there's been lower price and free alternatives for a while. I think there may even have been when I was using it, but a lot of the time, especially since they're, I mean, if you're just an individual using it, you're going to be more price sensitive. But if you're an enterprise that's using it, it's, unless unless the quality of the software is equivalent, you're willing to pay a fee to get a higher quality software.
But do they get better and better is the question. Like if they get better and better, if they use AI, can they get better and better for a cheaper cost? And then at some point, can it be disrupted? I guess anything can.
I would say part of it right now is really that sticking power, because when you are a professional, you're using the same software for years or decades, and you get so used to it that it's just worth the premium. Even if you're paying double the price, you're completing your work 10, 20% quicker just because you're used to it. So I think there's a bit of sticking power there as well, over just past if you're a new student or whatever. But that's why they do offer those free or discounted versions always. And that's the same thing which you have with Microsoft products, because they want people to get used to it when they're learning their profession and stay with it for the next 20, 30 years. And that's what I always like to watch, is can they keep that sticking power?
Yeah, I remember using AutoCAD even back in high school. I remember just briefly. I obviously went into business, so I didn't really have to afterwards. But yeah, that was 12 years ago, something like that, maybe 13. Aging myself.
You're so old.
Thanks.